So we'll start this, I guess, final workshop of this great conference. And the workshop will be focusing basically on the potential of fintech for the Islamic financial industry. So my name is Dr. Dalal Aassouli. I am an assistant professor and program coordinator of the Islamic Finance Master at HBKU. And I have the pleasure to have three panelists with me today. Mufti Barakatullah, who is a Shariah, prominent Shariah scholar. So he comes from the UK, and we have the pleasure of welcoming him today to share his perspective from Shariah requirements regarding fintech. And then Mr. Akbar, who is based here in Qatar, who is a senior director of asset management group at Al-Rayyan Investment, and Mr. Hakim, who is a researcher at the Center of Islamic Economics and Finance at HBKU. I'll start briefly with the background of basically fintech. I know some of you have been participating in the other workshops, and even in yesterday's conference there were a couple of discussions about fintech. I know there was a session on AI, some of its uses in the sukuk market. We spoke about blockchain, and then this morning, and actually now in parallel, about crowdfunding. And effectively, there is a global mobilization to discuss about the potential of fintech, not only in the conventional financial industry, but also there are some good practices and experiences that we hope to share today in the Islamic financial industry. So if we look at the global context, if we look at the global context, there are a number of developments that impact or basically influence or the use of fintech in the financial industry. And if you look at among them, the discussions on, of course, climate change, like blended finance, the SDGs, sharing economy, social finance, and we've seen that in the discussion about crowdfunding, and then ESG objectives integration, socially responsible investing. All of these developments actually question and requires or raises questions on how financial intermediation should be done, and probably that we should revisit how financial intermediation is done today. And of course, most of the discussions are focused on the SDGs, because these are ambitious goals, of course. I mean, the 2015 year has been critical in terms of achieving certain ambitious objectives for the international community, whether under the SDG agenda or also under the climate change agreement. And among a number of these objectives, of course, have social and environmental impacts as well, requiring an efficient mobilization of financial resources, but also issues with regards to transparency, to the traceability and the allocation of resources, and therefore looking at some innovative ways and leveraging on the recent developments in technology to achieve those goals. And of course, earlier we spoke about another aspect. I mean, during the crowdfunding discussion, which was mainly dealing with poverty and inequalities. And one of the key aspects, etc., is how can we use fintech, for example, to promote financial inclusion and to allow some of the basically bottom of the pyramid populations to access financial services, and therefore it impacts directly poverty alleviation and dealing with inequalities at the global level. And of course, we mentioned the SDG financing challenge, and in the previous workshops there were some discussions about using smart contracts, for example, or blockchain in the case of sukuk, and funds mobilization, and this is perhaps one of the strategic areas to look at when talking about fintech, and how can all of these developments be used to mobilize additional funds and in a more efficient way. Adding to that, of course, the green financing challenges, and among that, of course, we mentioned the Paris Agreement, with more than 170 countries ratifying the Paris Agreement with very ambitious goals in terms of transition to green economies, being mitigation or adaptation solutions. And therefore, when talking globally about the SDGs, of course, the goals of the Paris Agreement, you have three key challenges. It's basically the mobilization of resources, the allocation of resources, and of course, how do you assess the impact of any solutions that you develop. And through these three objectives or these three challenges can be addressed using fintech solutions. And when we go through maybe the examples with the rest of the panelists, we'll discuss some of the examples in terms of mobilization, allocation, and impact. Now, looking at the Islamic financial industry globally, it's a growing industry. Of course, you have today about 12 systematically important jurisdictions in 2017, and the word systematically has been used actually by the IFSB, and it simply means the jurisdictions where the size of Islamic banking assets represent more than 5% in terms of total banking asset in a particular country, and this list changes every year, so you have sometimes new countries where the size of Islamic banking assets is expanding. And of course, you have most of the concentration today is in terms of assets is in the banking sector, followed by the sukuk. So together, these are the most dynamic sectors in the industry, representing more than 80%. And of course, the GCC remains one of the largest domiciles for Islamic finance assets with 42.3% in the global industry. Now, we spoke about some of course, the implications or some of the aspects of fintech in terms of value proposition with regards to the SDGs, but looking globally at if we look at the global or the fintech value proposition, there are a number of aspects that either governments, regulators, or financial institutions look at. Namely, we spoke about financial stability, and this is from maybe a regulatory perspective. There is the issue of financial inclusion, which is very relevant, especially in terms when we talk about developing countries and the achievement of certain development goals. You have, of course, the economic growth, high customer experience. Of course, we talk now about the millennials, and we talk about sharing economy, we talk about mobile banking, etc. And all of these enhance or improve in a way the customer experience. In addition, of course, to efficiency, information asymmetry, transparency, and security, especially when we talk about impact assessment. Today, there are a lot of questions in developing countries on how development funds are channeled to development projects. And therefore, you have discussions now, for example, in using blockchain in the social sectors, talking about social finance, or even when we talk about sukuk now, there are some projects working on smart contracts. And in fact, last year in HBKU, we did work on one of the projects with one of the students on how do we issue smart sukuk. And of course, some of the driving forces are the regulatory burden, the financing gap of SMEs, and what we call the fintech-ready generation. And these are the millennials, of course, that they already use mobile phones for a number of transactions. And of course, you have the change in customer behaviors and then the smartphone growth. And we'll see in some of the models, for example, it's not necessarily needed. For example, if we talk about the case of Kenya or M-Pesa, I mean, you can use a simple phone. You don't need a smartphone to do mobile banking, to benefit from mobile banking services. Now, in terms of potential application, of course, okay. So at the global level, we see some leading countries, and this will, of course, lead us to the discussion on the GCC, what is happening in the region, and particularly in Qatar. There is about 37% of global financial services institutions that are using fintech in a way. We will see there is a variety of products. And the leading countries are mainly China and India, and then you can see a couple of other countries like Russia, like South Africa, and some of the South American countries also are very active in terms of fintech applications. And of course, the type of services that are used differ from between countries. And of course, the most impactful fintech services include, of course, wallets and mobile payments. Now, majority, I mean, if I ask among you who among you has a mobile wallet, either in the form of WeChat or Apple Pay or any of the other recent services, I'm sure, I mean, few of you will have that. I guess it's the case. Otherwise, we have to do a lot here in terms of fintech innovation. And of course, you have loans, mortgages, and then some of the solutions in wealth and asset management services. And this is a very interesting area when it comes to services like robot advisory, for example. And of course, as we said, so if you talk about the fintech applications, you can look at that by looking at the various segments of the industry, namely the banking, through personal finance, payments, transactions, lending. In the asset management side, through the distribution, the advice, or in terms of portfolio management, and of course the insurance sector or other industry propositions like the capital markets. I mentioned the brokerage services, or also the use of smart contracts in debt capital markets. Looking at the Islamic financial industry, there are a number of services that are developed. Of course, we talk about big data and AI when it comes to deposits, borrowing and lending, treasury services. You have also certain solutions when it comes to trade finance, through P2P finance, for example. We've seen, for example, the case of crowdfunding, and of course, you have the use of blockchain in terms of trade finance. And some of the least development areas today that are quantum computing, and also still in the area of AI, where certain segments are still underdeveloped. We spoke about financial inclusion, and the purpose of financial inclusion is using fintech for financial inclusion is that it increases the outreach of institutions, but also it reduces transaction costs. And I was in the previous session on crowdfunding. It was a very interesting example on how some people abuse the funding costs or the interest you have to pay on certain crowdfunding platforms. And this is perhaps what can be solved through some applications of fintech, for example. Moving forward, of course, there are a few areas to be considered to develop a fintech ecosystem. This includes, for example, unlocking the potential of digital technologies, country-specific partnerships to address country-specific barriers, financial innovation, basically to align the objectives of sustainable development with financial innovation. And as I said, this is the case, of course, for example, for using blockchain in terms of charity solutions, or in terms of raising financing for development projects. And of course, one of the very dynamic areas currently is impact assessment, which enhances the accountability and good governance. So therefore, you have a number of stakeholders that need to work together to promote this fintech ecosystem, and these include, of course, the public institutions, so the government, the regulators, the financial institutions, and of course the entrepreneurs. I will just I'll conclude with another aspect, and I spoke about this when talking about financing the SDGs, and we talk about blended finance today, and therefore is mobilizing the resources in the strategic use of development finance for the mobilization of additional finance towards the SDGs. And we've seen some of the solutions being developed, for example, in some countries through water sanitation projects, whereby basically you leverage on various segments, among them social finance, to attract private investment. And this is one of the challenges that the global community currently is mobilized to address, is the limited development funds. So how can you use these funds efficiently to attract more private sector investment? This is a brief introduction, basically about what is happening in terms of fintech, what are the active segments, etc. And I will start now the panel discussion, and to support or to go deeper into these aspects with perhaps some of the case studies or some of the examples of innovations and products. And also, so we have the industry perspective, and then we have the Shariah perspective, and of course we have some additional insights on capacity building and also on latest market developments. If I start with the first question to the panel, and basically what is the current landscape of fintech and its uses in the global and Islamic financial industry. Of course, we spoke about some of the segments and some of the active segments in the industry. But if you could share some examples from your experience on basically what is happening globally in terms of fintech and particularly in the Islamic financial industry. If we can start with Mr. Akbar.
Sure. Well, thank you very much, and thank you for those who come to listen to this workshop. I mean, that question, we could be here for another couple of weeks, to be honest, given that you've asked a very large and broad question. I think it's not. I think fintech obviously is a very general description of any young technology companies that are trying to break through into the very wide and vast supply chain and processes that go into banks, into insurance companies, into investment companies, and there are many aspects of the operations of these companies, both customer-facing and non-customer-facing, which, because of the, frankly, regulatory protection that a lot of these companies have, has allowed the incumbents and the traditional players to be effectively lazy, slow, have bad service, cost a lot, essentially not have a very good end result. There's very few people that I know who say, oh, I love my bank, I love my insurance company. There's far more people who say, I think Google is great, I love Amazon, I think Tencent is amazing, I love Uber. And I think that's ultimately where this is coming from. The reason why the fintech industry has exploded is because the multi-billion-dollar financial services industry effectively took itself for granted, took its monopoly position for granted, and or I should say relatively well-protected regulatory positions for granted. It's not necessarily a monopoly. And that has allowed competition, which is what you would normally expect. So the competition is more nimble. The competition has lower or relatively has a much lower cost base. You know, the cost base in some cases, if you're digital only, is not branches and real estate. It's data centers. It's capacity on the cloud. It's the cost of having your IT, your hardware and your software. But ultimately, the end result is to give customers a better product. Now, that could be because of front office enhancements or because of back office enhancements. And by back office, I mean help with risk management, help with fraud monitoring, help with knowing your customer and databases. Artificial intelligence has made a lot of strides, both in front office and back office. If you think about it, how you use your credit or debit card, the behavior that each specific customer has, and behavior that would be considered out of the ordinary in case your card is stolen, that requires some artificial intelligence. You know, do you normally buy, you may have a large amount of credit available on your credit card, but do you normally buy 7 plane tickets in 1 hour? You may still have a huge amount of credit left, but that would be the sort of thing that artificial intelligence would pick up. Do you withdraw money from 4 ATM machines in 1 hour in different parts of the city? That again, that sort of stuff. So that's fraud. Then obviously, you heard in the discussion about online and apps, and that obviously lends itself to huge advances in cybersecurity, protection, fingerprint technology. A lot of us log into our phones using our fingers. Some banks have caught up with this. Many banks in Qatar have caught up with this. But it's taken it took a long time between when the mobile phone industry caught up with it to when the banking sector caught up with it. So, and I'm not exactly answering your question. I guess I'm more introducing the topic as to why we are discussing fintech and why this has become such a big topic. Because banks and insurance companies and asset managers feel very threatened. They should feel threatened because, for the most part, they've been taking their customers for granted. And if other people, and so some of their competition is going to take their customers away from them directly because it's their digital alternatives. And some of the fintech is there to improve these companies and make them more efficient. And maybe we can discuss this in more detail, assuming these companies are willing to actually make the changes and have the innovation to engage with these fintech companies. A lot of these very large global organizations aren't structured in a way which allows them to effectively engage and benefit from how fintech companies work. I'll just give you one example. If you're a global company with your headquarters in one city and you have a fintech company which is, let's say, 3 or 4 or 5 people, and you have a cool new product because it's going to help some part of the bank, that bank may have a 1 to 2 year approval process, particularly if it's something technology related. This fintech company will go bankrupt in 1 to 2 years. They can't fund themselves for that long. So a lot of banks will, by definition, only go to the very large software providers because only they can have a 2-year wait time till the bank makes a decision, which means, again, you're going to the traditional sources, not the nimble, newer, quicker players. So there's many aspects of it, but this is one of the reasons why big financial companies are trying to play catch up and trying to and coming to this from a feeling of defense, because they are trying to prevent having their margins cut, having their revenue cut, having ultimately their market share and profits cut.
Yeah, that's a very good point, actually, in terms of competitivity, and I think this is the argument moving forward, is institutions now have no choice but to develop their systems and adopt some of the technologies in order to survive in the market and improve the quality of service that is provided to customers. And I mean, now I'll ask Mufti Barakatullah, perhaps you come from the UK, so we see a lot of developments also in the UK by financial institutions and all, and it's also one of the hubs of Islamic finance in Europe so far, with a number of Islamic financial institutions. Are there any, from your experience, any initiatives, like any good initiatives in terms of fintech in the Islamic financial industry that you could share with us, and how do you see them positioned today in such a global competitive market?
Assalamu alaikum. Yeah, I mean, the short answer will be that Islamic finance is lagging behind a lot. Islamic finance was lagging behind in financial normal product line. So in this also is lagging behind, but it's not completely out of it. Yeah. So, but let us understand that the whole fintech has opened the Pandora's box for all players, the regulators, the governments, and the monopolized companies, as you say. So everybody is now uncertain about their things, and there is a lot of uncertainty. So even the Facebook's currency, Libra, is threatened because of the threat felt by others. And as we have learned that there are people who jumping and using the new open door for fraud purposes also. So what I can give example that, like we 150 years ago, 200 years ago, we were dealing with gold and silver coins, and then the currency, the paper currency has liberated us, I can say, from the physical limitations of gold and silver and other things. But it took 100 years to stabilize and decouple it with gold. Still it was connected with gold standard. And during war and other places, it was decoupled with the gold standard. Now it has its own entity. So the sooner this entity was established, the currency, which is also the paper currency, not a real value, then the cryptocurrency and the fintech. Fintech, we haven't defined fintech. Did we define? Yes. Fintech is all the disruptive technologies. Beginning from the entity of the currency, the mechanism, delivery, and concept, yeah, and the players, yeah. So because all the rule books are being rewritten, need to be rewritten and rebranded, so everybody is really in a state of uncertainty. I mean, I would not say confusion, I would say uncertainty. So it is like a catch-22 game. If there were regulatory framework for fintech, it would have been easy for the conventional industry to settle down, and the Islamic finance would have done. But at the moment, the disruptive technology, fintech, in finance and other consumer-related issues the technology is ahead of the game of all the thinkers, regulators, and courts and everything. Yeah? And the consumers are jumping at consumer or stakeholders and new stakeholders are jumping on this, and they are making use of it. So while the regulators are still trying to, I mean, Bank of England or the US and UK regulatory authorities, for last 2 to 3 years, they have a research group and policy group, proposal group, but no concrete proposal. And among the European regulators, only Swiss regulator is most open to this fintech technology. And that's why you can see that the Facebook currency, when it was proposed to be launched through Swiss system. And let's hope something comes out of it. But while the central banks are still protecting or not taking a quick decision to put the rules of the game, but the stakeholders and people are pushing the boundaries. Yeah? I mean, in England and US and UK, the crowdfunding has really now taken off and it's being stabilized. And once it is stabilized, the fraudsters and other scrupulous people have been rooted out, then of course so I can share with you that there are 2 crowdfunding property platform in UK who are Sharia compliant. One is called Yielders, 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 and the other one is called Igloo Crowd. I happen to certify one of them. And so these are only 2, because even before these were there, when I saw the normal crowdfunding platforms, property one especially, they were all based on equity and equal sharing. Only reservation from Sharia point of view was that they were leveraging some time through loan, yeah, to fund their projects also. They were not entirely dependent on the crowds to fund, because in the property market sometimes it's needed to close the deal, and if enough crowd doesn't come, then it is a problem. So apart from that, when I studied most of them, I thought that they were 90%, 95% Sharia compliant anyway. Only some of the issues were there, but then of course some other players came up and they started. And even in India, I have authorized one crowdfunding platform, but it's still it's not launched. From Sharia point of view, I authorized it, but the regulators are still reluctant. Yeah, because regulators still see the new disruptive technologies within the prism of old thinking, like riba-based, loan-based, and other things. They have not liberated their mind from the previous model of business. Yeah? So they have not accepted this. But they have to, sooner or later, they have to accept. But the financial institution and the banking and traditional and insurance institution are slowly adapting. I think the confused.com, there is a confused.com is really the attractive name, but they are really putting everybody on the limelight, that who is where. And now everybody is forced to match their prices and offerings, and it has benefited customer very, very much. They cannot start a new insurance company, but at least they can force the other 200 insurance companies to compete with each other and make it a level playing field. We had, Dr. Nazim Ali Sahab is here. He organized a workshop on fintech in London School of Economics, and we had whole day discussion. And the economists and the bankers and other people, they were hotly debating things, but Sharia scholars were very relaxed. So really, they say, why? Most of the time, Sharia scholars are more excited and trying to intervene and say this is allowed, this is not allowed. But on fintech issues, Sharia scholars were the most relaxed participant in that workshop. I'm just trying to convey to you the atmosphere that there are no Sharia issues. Sharia is like kullu shay halal illa ma harrama. So anything, bring any new ideas as long as you do not treat on the red line, which is of course like fraud or deception, gambling, and all the other things which are known. Then technology is really to facilitate and to develop and put the cause of everybody, humanity at further. So the Sharia is not there as a hurdle to the development and progress. Sharia is there to facilitate development and progress. Only the Sharia rules are there to weed out all the fraudsters and those people who play with people's possessions. So for what I can say that more than business sector, the charity sector has taken up the fintech. So, for instance, in the United States, there is a launch good. And even the Facebook is allowing donation buttons to be put in certain jurisdictions, not everywhere. I don't know in the Gulf they allow it. The UK and US, they allow anybody can raise fund for anybody for any causes. Yeah? Just declare the project and connect with your account and just post it on Facebook. I have done it for last 2 Ramadan. So it is to be seen. So and then there were commercially just giving in other platforms who were charging some commissions for charity, but then the other sector jumped in. There are like half a dozen other players who do not charge a single processing fee. So putting the transactional cost to zero for charities, and it has improved the charity taking and giving all of it. Yeah. So more than, of course, apart from property market has been very fortunate to have sizable fintech presence through crowdfunding. But in the Islamic area, the charity and zakat and sadaqat and international aid programs are very well used, advanced through the fintech and at zero cost and with the speed of light. So within few weeks or few days or few months, you can do big and large projects. Yeah. So it's accelerating the progress, making it efficiency, cost free or minimal cost. It's now this really the game is with the regulators and the other players and other institutions to catch up. And Sharia is really taking there are not many no's in like in the conventional finance. We say this is not allowed, this is not allowed, this is not allowed. But in fintech there are very few. And inshallah, suppose like cryptocurrency, although cryptocurrency has not taken up now, but enough discussion has been generated from Sharia point of view also in the cryptocurrency, which is really like one step further than the paper currency. So liberating the humanity from the shackles of all the people who try to control.
So,
yeah, okay.
Thank you. Yes, so these are really insightful, basically, examples. And you mentioned, of course, the focus on charities, and we've seen examples, as you mentioned, of Launch Good, this crowd. And, of course, in the UK, I think in London, there was the first
just giving
donations in terms of cryptocurrencies. It was very interesting. One of the first mosques to accept donations in cryptocurrencies. And I'll now turn to the Hakim, who's my colleague. I know we have, of course, I mentioned we have a Center of Islamic Economics and Finance at HBKU, who is very active in terms of leading the discussions in any emerging topic. And I think the first time we had a discussion on fintech was 2 years back. Yeah, bringing together key experts, and of course the LSC workshop that Mufti Barakatullah mentioned. So throughout, that brings me maybe to the second question. Of course, you can share also your perspectives on the first question. Where do you see from the various research projects and of course the discussions we had in at the college with the various industry experts, what are the leading segments in the industry in terms of fintech innovations? Of course, Mufti Barakatullah spoke about the social finance sectors, but in terms of the industry itself, can you highlight some of the examples maybe?
Assalamualaikum. Thank you very much, Dr. Dalal, for introducing me. Okay, going back to the first question regarding what are the market current landscape, right? Or just to bring back the perspective, let's say we here in Qatar, if let's say we want to try to understand how far our government or let's say our financial institution has adopted this new technology, we can just try a very basic example. I think most of us here has gone through an accident before, right? So the accident process to actually get yourself insured will take almost half a day, okay? So you will almost lose half of your day just because you want to get your car fixed or something like that. So going back, what is fintech, right? It is a system of financial technology that is a lot of operation for the consumers. So regarding your question related to where are the leading research that is being conducting right now, first and foremost, before a research is being done, we need to understand the consumer. So if the consumer are looking for something that is according to them or something that is easy and accessible in terms of the financial industry, and there is a pressure from the regulators to have to understand this new market, the academics are mostly going to be shifted to that direction. So mostly the research, your question or the leading segment of the research that is being done currently in the Islamic finance are mostly in the AI technology and also the crowdfunding. So one of the key example of AI technology that is being adopted in the GCC is by Abu Dhabi Islamic Bank. So they are the first person that is launching a robo advisory Shariah, whereby the data itself, the fatwa that they collected from their inception is almost close to 45,000 fatwa. So they make this fatwa in a sense that is easily accessible within minutes. So let's say there's a customer that coming in and they wanted to know a certain Sharia legalities issue. They just, with a click of a button, that answer will pop up. Okay, so with this kind of theories or this kind of things that is happening, there must be Sharia related issues regarding that, or they also must have any regulatory issues that relate to that, and also on how to improve the efficiency between these things. So this is basically what the research industry or the research or academia are trying to actually bridge between the theory in practice, in principles, and how it should be practiced to improve efficiency. Okay.
I mean, that's a very good example of Adib, and I think there was another firm in New York, basically Wahdi Invest in terms of basically asset management. They do a robot advisory service, and it would be interesting to hear maybe from Mr. Akbar, how do you see the development, for example, particularly talking about the asset management industry within Islamic financial, Islamic asset management? Can we potentially see in the future a shift towards maybe robot advisory services? Is there a demand for that among Islamic investors?
Thank you. when we talk about it, and I say this working for the Islamic asset management arm of an Islamic bank, when we talk about what Islamic banks would want to do or Islamic asset managers would want to do, there's no need to, in this context, mention the Islamic part. A bank is a bank and an asset manager is an asset manager and the customer is the customer. A Muslim customer doesn't have different requirements to somebody of any other religion. We just happen to be Muslim, but we still have money and we still need it to do things for us, just like anybody else. Muslims don't take more risk, don't take less risk, don't like or dislike certain things. We just happen to be Muslim. So in the same way, when we as an asset manager are trying to figure out how to address our client base, we're not trying to address how to address Muslims. We're trying to address how to be a good asset manager that happens to do things in a Sharia compliant way. And the example I'll give you is that, many of us here live in Doha, but one of our colleagues here lives in London. If one of your non-Muslim friends wants to have a meal and there are 4 restaurants in front of them, they're going to choose the meal with the best food. If that meal also happens to be halal, good, but that's not the primary objective. So if Islamic asset managers only think that they are dealing with Muslim customers, then, that's not a very good business model because you've cut out the rest of the customer base. But there is no reason to think in that way. So, and I apologize, but the reason I say this is because we hear this all the time is as if the Islamic financial industry is special in any way. It is special because it's as a Muslim, it's special because it conforms to the principles of Sharia. But it's not in no other way is it special. If you do not have good service and you do not have good products and they're not at good prices, you deserve to fail and you deserve to be bankrupt. It's that simple. There's no reason that Muslims should put up with bad service, price, or products. So to come back to your point is, will we have robo-advisors, for example, in Qatar? I don't think so. And the reason I don't think so is because we're too small a market. We're population in Qatar now. If we were having this conversation 10 years ago, it would be a different number. But at the moment, we're just under 3 million people. That 3 million people includes roughly half of the people who are blue-collar workers who probably aren't going to be doing a lot of investment. Of the other half, let's say we're talking now about 1.5 million people, 250,000 Qataris. Now I'm talking about men, women, and children. Not sure too many Qatari 3-year-olds or 93-year-olds are going to be worried about investments. So I guess what I'm trying to say is that in terms of the number of people in Qatar, regardless of their nationality, who are of the age that a financial institution would find them attractive, age and income, we're talking about a few 100,000 people. The amount of investment that is required to build one of these platforms is not going to justify is not going to be justified based on such a small market. So Qatar is not where you will expect this to happen, and not in an innovative way. Maybe somebody will buy something in a box, i.e. software in a box, but this is not where you would expect it to be leading. Saudi, UAE, if I'm talking about the countries around us, are larger populations where there's bigger market. Malaysia, obviously, is the giant. Indonesia is another giant. Pakistan, Bangladesh, India. These are the countries with very, very significant numbers of Muslim population or Sharia-sensitive population, where you could end up seeing some innovation in these parts. But in terms of innovation, one of the in Kuwait, interestingly enough, the most technologically innovative bank is an Islamic bank, and actually has forced every other bank, regardless of whether they're Sharia or conventional, to spend hundreds of millions of dollars to try and catch up with them. Why? Because they took their customers away. It's very simple. Mm-hmm. And that bank is called Bubian Bank, and they had the benefit of being a new bank. They had new technology infrastructure, which is one of the big hurdles for an existing bank, because you have this archaic legacy infrastructure, which is unflexible, which is costly, which if you have to make it more flexible, you basically rip it all out and start again, and nobody wants to do that, neither the bank nor the regulator nor the customers. So, which is why you have very little innovation. So when you start from scratch, you start with considerable advantage. You start with a clean sheet of paper as to what the customer wants today and how you deliver it, rather than where it used to be 20 years ago or 40 years ago when there was no technology. So what Bubian Bank has done is, they have many innovations, and they have an innovation center. They have fintech scientists and people who work for them, and that's in other countries. There is a discussion as to whether you should buy fintech as a financial services provider. How should you engage with fintech companies? Should you buy them? Should you work with them? Should you have joint ventures? Should you work with one? Should you work with 20? People have a lot of the large global financial providers have their own fintech sandboxes where they're spending hundreds of millions of dollars for their people to try and innovate to help them get products. But Bubian, as an example, simple things. When you go to the ATM machine, you don't have a debit card. You use your Kuwaiti ID card and put it into the ATM machine to get your money out, which is pretty sensible because your ID card has all the information that you would want. It's got more information, frankly, than your debit card. So why do you need a debit card? So that's an example. So you go to the ATM machine, use your debit card. Another example is when you go to the ATM machine, there is a handset like a phone, like an old phone, which I know a lot of young people don't know what that handset looks like anymore, but all of us in this room do. And you pick up the handset, and on the screen, you will have a video conference call with the customer relations agent at the ATM machine. Makes a lot of sense. It takes a lot of the hassle out of this is not working, or you're not just dealing with the ATM machine, you're dealing with, you've gone to the bank. You want to do anything with the bank, you have a real life person who you're talking to. You don't have to worry about typing and spell correct and the person doesn't understand. You're actually having a conversation with a real life human. The third thing that I'll give you an example for them is when you, and this is again to your point about regulatory creativity and innovation and freedom, when somebody takes a loan, and Bubian is predominantly a retail bank, but when somebody takes a loan from Bubian Bank, they can do it on their phone and they don't have to come in to sign anything. It's all based on the app on their phone. Just think of how that transforms things, because in many countries, the regulator will not permit that to happen. So the regulator, interestingly enough, I take Qatar as an example, and we face this as an asset manager. I can log into any bank in Qatar, I can log into my online bank account, I can move money, I can do many things, but if I want to take a loan, I have to come into the branch to sign a form. Why? You know who I am, because if you don't trust me, why did you let me move money in and out of my bank account? So, but to achieve that, there was a certain amount of technology and innovation which they had to do to convince the regulator that this was possible. This is an Islamic bank that led the way and forced everybody in Kuwait to catch up with them, so much so that National Bank of Kuwait, which is like the QNB equivalent, bought the bank and not only do they own the majority ownership of Bubian, so National Bank of Kuwait is a conventional bank, they own 60% of Bubian. Even today, after having owned it for several years, National Bank of Kuwait is still losing customers to Bubian. It's the same thing. So conventional customers are going to Bubian, and I have a lot of friends in Kuwait who do this, and I say, why are you going to Bubian? It's a better bank with better service, a better product. Why wouldn't I? The fact that it's Islamic is irrelevant, which it should be. So I think the attitude and mindset has to be of how do we compete with the best and how do we provide something that people want? Otherwise, in 15 or 20 years' time, today you can transfer money through a bank or through Ooredoo or through Vodafone. Telco companies and technology companies will be the ones that do all of our financial services, basically to have all the financial services products. And banks, maybe, if they're lucky, will be somewhere in the back end, perhaps providing some services, because there's no need for them. If you're going to be bad at what you do and other people come and innovate and take your business away, well, good for the customer, bad for the uninnovative and lazy thinking organization. And I think this is an important point, because having in many, and it's a function of perhaps the financial crisis, where banks and insurance companies are terrified of the regulator. They're terrified of getting something wrong. They're terrified of getting a fine, because particularly globally, a lot of banks and insurance companies got fined extensively for regulatory missteps. So the culture in most global or regional organizations is not one of which rewards innovation. It rewards not making mistakes. If that's the culture, you will not, you're opening yourself up for competition to come and eat your lunch. And that is a very difficult mindset to change when any small misstep will lead to a regulator coming and slapping you on the wrist. So again, going back to the point earlier, the companies have to change, but the regulatory environment has to want to allow these changes to happen.
Thank you very much. This is a very interesting point actually about the ecosystem. What should we do in terms of to promote fintech? And of course there are the regulatory aspects, the Shariah aspects. Although Mufti Barakatullah was not very was very lax in terms of the Shariah requirements, because simply it serves good purposes in some cases. And that brings me basically, we're talking about question 3, and of course we looked at other segments, of course the example of banking activities, and it's true actually that we should, any fintech innovation should meet basically the customer needs and should be in a way adapted to the local context of country. And it's good that, as mentioned by Mr. Akbar, in the case of robot advisory, whether it makes sense or not in the case of Qatar, and that should be the same analysis or the same considerations to be looked at for every new solution that we want to develop. There is another segment actually that we is developing right now. There are some discussions, which is basically the use of smart contracts, and specifically in the case of Sukuk, I know in Indonesia there is a company who's already working on that. And this will solve many issues, but again, what is the framework? Because as you know, in traditional Sukuk issuances, you have a number of third parties that are involved. So what happens if this is done through a smart contract? And I would ask Mufti Barakatullah, I'm not sure if you had the case been involved in any discussions on smart contracts so far, but if we think about a Sukuk, a smart Sukuk, how would be the Sharia process then? Did you already start that discussion among maybe the Sharia scholars? Because yesterday, effectively, the question was there. How do we look at solutions like blockchain, for example? Because this is the technology that is used in the case of smart contracts when it comes to the Sharia compliance, etc.
Thank you. Yeah. I think I can remember in 1986, I gave my first lecture in Islamic Development Bank about the use of artificial intelligence in Sharia.
Okay.
Wow. Yeah.
Wow.
1986. Mm-hmm. And it was a chairman, Secretary General of the International Fiqh Academy, and all these scholars. And it was a difficult challenge for me to talk in Arabic because the topic is strange, and I prepared it in English, and they asked me immediately to switch in Arabic. So Sharia scholars are always discussing it, and a smart contract, first of all, the Sharia was more smart than the smart technology. How? I'll tell you. Because in Sharia, this verbal communication without any record is the contract. Yeah? Ijab and Qabul is verbal. So Sharia was really more facilitating than even technology. But one of the UK lawyers told me, don't tell this nowadays, because the written contract is the record of the verbal communication. Yeah, that was the first and most easy way of communicating between human beings, and that is as binding as anything else. Okay, so that is the muqaddamah. At the moment when we use computers and websites, we are always asked to tick, click, agree. And the contract is around 10 to 20 pages. And none of us ever bothers to read it. And we always agree and sign. So the smart contract means without reading everything, based on the generalities and the common sense and goodwill, we are always signing smart contracts already on the computer to go any site, use cookies and all sorts of things we are doing it. But for a Sharia point of view, it's really, there is no prohibition that I can give you an example from fiqh books, like those people who communicate by sign language, yeah? Isharatul akhrasi mu'tabaratun fi sharia. So he's saying, yes, I agree, just by hand movement is as valid as verbal and as valid as signing. So all three ways of communicating your agreement to certain thing is equally valid, depending on the context, yeah? And of course, there are discussions and papers about electronic buy and sell, yeah? Electronic transactions without, it's just all the transaction is just click of mouse. So mouse has taken up another way of thing. So that has been, I think that has been sorted out from Sharia point of view. The click of mouse is ijab and qabul. So even Hanafiya, they had a transaction called Bayul Istijrar. Bayul Istijrar, where there is no communication. Just over the counter transaction, giving and taking, going and picking up the goods from the shop, and at the end of the month, statements come. That's it, without any ijab and qabul, even without any physical communication. It's just, it's called istijrar, mean a standing order. Yeah, istijrar can be translated as standing order, is a repeat of the initial order without any other prompting later on. Bayul istijrar, this exists in Sharia. So I think the electronic or istijrar or whatever communicates someone's willingness and agreement, it should be accepted. So the smart contract is not. Problem is that there is a joke is called small print. Small print, dodgers and other people who wants to warn you, but they warn you in a so low voice, a small print, that you cannot even read it. Yeah. So that's a deception. Yeah. This is a lawyer's deception, legal deception. And so as long as there is transparency, as long as there is no deception, and as long as no duping of, dodging of the customers, then smart or no smart contract, all the contracts, whatever is the agreement of the customer is taken, will be Sharia valid. There is no Sharia issue.
So just for the audience, you will have time for a Q&A session, so we just prefer to have it towards the end. So that brings me actually to basically a continuation of question 3, which is question 4, and I'll ask maybe Hakim to share, because we spoke about a couple of challenges from the regulatory perspective, from the Sharia perspective. We spoke about the customer experience or some of the local needs that needs to be taken into consideration in terms of developing any fintech solution. We spoke about the issues of transparency. But what about the skills? And actually, when we spoke about the Sharia review, and maybe if you have any additional points to add on that, there is a clear need in terms of capacity building and what skills are needed, because a lot of people talk about the transition, and for that transition, of course, there are some social implications, because whenever you have a fintech discussion, you talk about the impact in terms of for some people losing their jobs, etc., because you're moving to technologies and robots, and maybe if we have Sharia robots, will Sharia scholars be always required? So that's one of the jokes we always hear when we talk about using, for example, fintech in Sharia advisory process. What do you think, Hakim, from a capacity building perspective? I know at HBKU we're also enhancing our programs to integrate fintech as one of the core courses in finance programs, etc. So if you can share your perspective.
Okay. So going back to the question regarding the what kind of skills are needed, right? So we need to understand that fintech technology are only as smart as the human can be. So the human are the one that fed the technologies on how smart that they can be. So one of the challenges of, let's say, we take an example is robo-advisory, right? So how can we actually take Mufti Barakatullah, his experience and from Darul, right, and transfer that kind of knowledge into an artificial intelligence and make intelligence his tilmis, let's say. So in a sense that AI technology will become his electronic or e-tilmis or e-students. So this is kind of challenges that is facing the industry, meaning that the Shariah scholars need to be well educated in a sense that they can actually understand the language that they can communicate to their e-student. Let's say here, quote unquote, is the robo-advisory. So as for what we are trying to do in HBKU per se is that our courses are driven to look at novel solution in a sense that we build our students core principles in, let's say, Islamic Finance, Shariah, and stuff like that, and try to have them merge with the technologies that is driving the industry. And one of the example that what HBK is doing is providing courses in entrepreneurship in our PhD program. So what is being taught in the entrepreneurship courses is to actually have Fintech per se, right, is a novel solution on how to actually help the global society or the global citizenship in terms of, let's say, people in refugee camps, or let's say improving the life of a child, let's say, and stuff like that. So these are the things that we are trying to do in HBKU, and also a part of our innovation center is also the Kiri and stuff like that.
Okay. Yeah, effectively, that's it is a huge role basically from to be played by educational institutions, and of course we have, as my colleague Hakim mentioned, we have a couple of programs and courses focusing particularly on this, like aligning technology with finance. But in terms of institutions, and of course also in terms of financial institutions, Sharia advisory firms, etc., there is also a need for capacity building, let's say, because you mentioned the no objection from a Sharia perspective on using smart contracts, but I guess when everything is automated and using the blockchain technology, how can you assess that? And we had the same discussion yesterday with rating agencies, legal firms, etc., because all of this will change, and the nature of their services would need to be adapted basically to accommodate smart sukuk. And that brings me actually to question 5, and of course the other panelists can also share their thoughts on the capacity building side. But if we talk in the context of Qatar, so what can be done, or what can the local stakeholders and institutions do to accelerate the adoption of fintech by the Islamic financial industry, or the financial industry in general? So we know there is a fintech hub, like a Qatar fintech hub that exists, and we know that QFC has been trying to attract fintech companies, and so far there are like 2 companies that are already offering solutions under basically the QFC umbrella. But what can be done to promote more solutions and perhaps attract more innovative fintech solution in the context of Qatar? Yeah, Mr. Akbar, you want to...
Thank you. I think ultimately just allow free competition as there can be amongst the different players, and that competition will itself lead to innovation and lead to the larger players having to make changes. So as an example of a local company that has used fintech and has benefited greatly on the insurance side, Qatar Insurance Company took the lead amongst the local insurers of developing an app and having a very large proportion of what the customer's interface with QIC is to a large extent done on the app. And they have left all the other insurance companies behind, and they have taken market share. Now, one of the reasons why QIC is able to do this is because it is by far the largest player in the market. It has the resources, the balance sheet, and also it had the number of customers which justified putting that investment in and then becoming even more dominant. If you're a new insurance company, let's say you have an even better technology solution to QIC, I guess you could have that, and then you would need to spend your money on advertising to make sure that people know who you are, and then maybe people would be able to switch that. But that also requires, and I'm not an expert on it, that would require a smaller company to probably pass the capital requirements that the regulator would have to allow an insurance company to actually to operate. So companies in the QFC, for example, can't operate in the state. This is not fair competition. There are insurance companies in the QFC, but they've only very recently been allowed to start operating in certain controlled parts of the state. Commercial Bank, as an example, recently introduced tap and pay, which is something which has been around in the UK for a while, but it's new for us in Qatar, where when you use your debit card or your credit card and you want to pay at the shop, you don't put it in and type in your PIN number, you just tap it. Again, that's fintech, that's an innovation, it saves time, energy, etc., etc. So fintech is not about revolutionizing the world, it's about small things which make, which increase efficiency and which cut cost. Essentially, if you keep plugging away at these things, every bank, Islamic or non-Islamic, has an online ability to access your account online. They have mobile applications. Those mobile applications, by and large, do the same thing. Some of them are prettier and easier and quicker and more user-friendly. Some of them are a bit clunkier, but they all basically do the same core things. Some banks have spent more money and you have more flexibility and more features, if you like, in the app. But it's an iterative process which keeps getting enhanced over time. And Qatar is no different to any other country where these features will keep happening. What probably won't happen in Qatar is that you won't get a digital-only bank, which has been the biggest source of disruption in Europe and in the US and in many other countries, which completely turns the market on its head. And the real reason is because the government owns all the existing banks. So that is a pretty big conflict of interest to prevent a newcomer who isn't owned by the government, unless somebody who is an existing bank opens up a digital-only bank. So I used to live in London, and I still do. I bank with a bank which is digital-only, and it's 100% owned by HSBC. It's completely separate to HSBC, but it's owned by HSBC. And I would never bank with HSBC, but I bank with a digital bank. So again, one of the banks in Qatar could launch a digital bank. The question is, if we're again talking about Qatar, is how big is the market here to justify the process and expense and everything else of opening that bank? Regardless, we will continue to see innovation. So one of the things which people have started doing now, I talked about tap and pay in some countries in the world. Again, it seems blindingly obvious. Instead of tapping your debit card, you just use your fingerprint. Your phone knows who you are. Your bank clearly knows who you are if your bank app is activated by your fingerprint. So when you go to the point of sale machine, why not just have a fingerprint reader? So you put your finger on the fingerprint and the money gets charged. This is starting to happen in some parts of the world. Again, simple innovation, makes sense. The finger is accepted in many areas. And I think I wouldn't be surprised if at some point in the future we get the same innovation. So we will keep progressing. And I think relative to a lot of countries, the quality of the amount of fintech that is already integrated into a lot of banks in Qatar is relatively high. Probably one of the large economies with which is lagging the most, if I take the average, is the United States, where you have thousands of banks, thousands of subscale banks, which just have very, very poor integration of fintech because they're kind of living in the past. You obviously have some banks which aren't, but I think in Qatar, relative to many countries, we're doing a relatively good job. There's obviously always other places that we can learn from and catch up with, but it's a reasonable place at the moment, reasonable standing at the moment. Essentially, it's the banks complaining that somebody is providing a service that they're not able to and wanting protection from the regulator. So if you're the consumer, which are you going to prefer? Do you wait for 10 years and hope that a bank opens a branch next to you, or sign up to the mobile phone operator to have a bank account next week, or probably in 15 seconds, whereas the bank account opening process will probably take you 2 weeks? because they will probably require you to come to the bank. And if you're a few hundred kilometers away from the bank, how does that supposed to work? So this is going to be, this is and has been and will continue to be the biggest stumbling block. Would you like to add anything?
Any other questions? Yes.
My question goes to Mr. Akbar. If you look at money creation, it's an important economic stimulator. And I want to know your thoughts on the future of banking. Looking at the fractional banking system, whereby we create money and stimulate the economy. If you look at peer-to-peer lending, with regards to fintech, let's say 10 years time, 20 years time, if let's say fintechs, in terms of peer-to-peer lending, takes over from banks, do you think we'll still need banks? One. And two, do you think we should have central banks maybe issuing, let's say, cryptocurrency or let's say synthetic currency, where they can use that as a channel to create money in the future? What are your thoughts on that?
Thank you. Again, a nice broad question. What is the future of banking? We could be here for a while. The explosion in peer-to-peer lending, to my understanding, and I'm not an expert on it, really happened after the financial crisis for two reasons. One, because the technologies became better and secure, and people trusted them more. But also because after the financial crisis, banks went into their shell, and because of even more regulatory oversight and even more cautiousness in terms of how to operate and not wanting to get into the problems and holes and needing government bailouts in many parts of the world that they did, they effectively stopped doing what their job is, which is disintermediation. Which is to be a transmission mechanism connecting borrowers and lenders. They took deposits and then lent them out to the people that they quote unquote trusted, whether that's governments, whether that's large corporations, whether that's or in fact investing them into, again, government bonds or other areas. The people that lost out was in many cases individuals or SMEs, small medium enterprises, which banks weren't paying attention to because of what had just happened. Again, if you are in a business and you aren't doing a very good job of addressing a demand, somebody else will address it for you. So it's a very good source of, it's a very good thing, I guess, that peer-to-peer lending has risen and grown as much as it has, because it reminds banks that if they don't do their job, somebody else will do it for them. But I don't see banks going away, because unless the central banks and unless regulators decide that they do not want the banking sector to be the transmission mechanism between monetary policy and the rest of the country, banks are play a critical role in this, and there's no one else who can bridge that gap. There will be, so you mentioned peer-to-peer lending, we were talking earlier about mobile money transfer. There will be a number of other areas where companies, whether they're generally either technology companies or others, will start taking share in some of the businesses that the banks didn't do, or because of their innovation and creativity, develop new business lines which banks never had in the first place, but satisfy the demands and needs of the marketplace. So I guess as a bank in most parts of the world, it's becoming harder and harder and harder to operate because the regulators are becoming more and more demanding. The cost of complying with that regulation and the mounting regulation is getting more and more costly. The cost of breaching a regulation in terms of fines is also getting more costly. The competition is getting higher. So in all of this either squeezes a combination of your revenues or your profits. And so the biggest survive, and if you're not that big, you basically get either you fail or you get consumed by a bigger bank. So over time, maybe what you would see is the continued consolidation of the banking sector globally, and particularly in areas where you have high levels of regulation, you will see it very difficult for small banks to exist, because they're not able to actually pay for the resources internally to actually meet all those regulations. And also some of the banks in Europe and the US are still getting government subsidies that they got from 10, 11 years ago. And why is that governments are still doing that? Because they recognize that without these banks, the way that the modern financial system works isn't going to work very smoothly. So if somebody does sit in a room one day, and I can't imagine the central bankers do this, but central bankers of the OECD or the G20 economies, for example, do have meetings. I can't imagine they sit down and say, so what's the alternative to the banking system? How should we do that? I don't think that's an agenda point. I think it's about how do we make the banking system cleaner, safer, reduce money laundering, reduce the negatives, but at the same time, each time they do this, the burden on the banks increases. And on the table next to you, there's one of my colleagues who works in another Islamic bank, in Barwa Bank in Qatar. The other thing which regulators have put, which he can attest to, because the other thing that regulators have done is they've increased the capital requirements of a bank and the burdens of how much capital they need. And that is another drag which reduces profitability, because you have to have more and more effectively lock up capital which isn't going to be getting any return to satisfy the regulatory requirements. So this is the challenge, that I'm a bank, I've got all these mounting regulatory costs, and then people like us are saying, you're not innovative, you're not doing new products, you're not using technology, you're not catching up with all of these other people. And if I'm the CFO or the CEO saying, well, where's my budget for this? I'm trying to cut cost to cope with all of these extra pressures, and you're telling me I need to spend however many $1 million a year to develop new products. I don't have the money. And that's why people who, fantastic example of Facebook and many others, are able to do this, because they have very different resources, and they don't need to go to an external company to design technology. They do this for a living. We in Qatar are talking about regulatory structures. The trading of cryptocurrencies in Qatar is banned. So I don't think a new currency will be using Qatar as a domicile anytime very soon.
We take maybe two last questions and then we can wrap up the session. Yes?
If you look globally, fintech is supposed to solve two issues. Giving access to financial services to the underbanked and the unbanked.
Yeah.
If you look at Muslim populations globally, they are some of the largest underbanked and unbanked. And it's a question not just to the banker, but to the panel. Why are Islamic banks, why is the Islamic finance industry not providing solutions to Muslims who are underbanked or unbanked? If you look at populations in Indonesia, if you look at populations across Pakistan, across India, across Bangladesh, these are some of the largest global populations of Muslims, Egypt, Saudi Arabia. Why is the Islamic finance industry not providing solutions to these demographics?
Well, that's a very good solution, and that's what I think at HBKU we're trying to look at some of the potential solutions. And effectively, we looked at the example of M-Pesa in Kenya, which is a good model. And in fact, it doesn't require a lot of, you don't even need a smartphone basically to do your transactions through M-Pesa. So to give you an example, in one of the courses, we push students to think about similar solutions and to look at the Islamic side of it. And effectively, when we looked at some of the existing solutions, well, one of the pioneers now, M-Pesa is partnered with PayPal, so that you can even transfer money, and it's becoming, so if you go, I think, to Kenya, there are more M-Pesa agents than ATMs. And that's very...
M-Pesa is
yeah.
telephone, it's
Yes.
provided by a mobile operator.
Yes.
You have Islamic banks,
Okay.
the largest banks
Yep.
across the world.
That's that's a very good point. So we've looked at what is existing, and we're focusing our efforts pretty much in the past maybe 2 years, looking at another segment which is really underdeveloped, where there are resources, especially Islamic social finance. And this is where you have a lot of resources that initially, we have the scholar next to me, if you look at the objectives of Islamic law, etc., and if you talk about the whole Islamic economic system, everything should work together, all the segments, in order to effectively achieve the human well-being, if you want. That's basically the ideal word. And in that economic system, you have Islamic social institutions should play a greater role. And these are not only Islamic microfinance institutions, which we find in some countries, but they still have challenges in terms of outreach. And in terms of sometimes of costs and competitivity, but also the other segments in terms of awqaf, zakat, and charity institutions. And in some cases, because it's good that you mentioned the Islamic banks, we've looked at that, for example, the practice of Qad Hasan is not anymore developed. And here in Qatar, it used to happen a few years ago, but suddenly it was stopped. Maybe the context is not really the right context to talk about maybe some issues in terms of poverty. But even looking globally at jurisdictions with Islamic financial institutions, not many offer Qad Hasan, for example. So you see there are some key social tools in the Islamic economic system that are not used properly today. And last year we had a big conference on awqaf at HBKU, and that was the whole purpose. Like, how can we revive this culture, for example, in awqaf, using what we call cash waqf, for example. And this is to basically serve those populations, because if we focus only on Islamic banks, it's a profit-making institution. So again, some of the challenges facing those institutions were highlighted by Mr. Akbar. You have the regulatory requirements. Now all institutions have to comply with Basel III, etc. It's quite challenging for them. So maybe it's not really their mandate. And now we're talking in the industry also about what we call value-based intermediation. And now Malaysia is trying to develop a few initiatives on that. But when looking at what they're trying to do, it's not really to serve those segments. So basically, you just try to demonstrate that you are creating value through your business, through your existing activities. So if I'm financing the construction of a factory, I just need to make sure that there is an environmental impact. And the social impact could be maybe gender equality in my company, could be in terms of the wages and the salary, etc. So what we were focusing on, and I believe it's really the potential to position the Islamic financial industry in terms of social impact and effectively address the needs of bottom of the pyramid populations, is really to leverage on these solutions. And then there is another concept we were also looking at, is what we call blended finance. So I think some of the students also were working on that in their projects, and we looked at some of the big infrastructure projects that were financed, for example, in Africa. Let's say, we've looked at the case of Nigeria, where you had some water and sanitation projects. And what you do, you can leverage on those social finance segments to make these products more accessible to customers. For example, sometimes when we talk about water and sanitation, it's a very small amount that you need just to put in place in every household proper facilities, right? So sometimes it's $50 that you need, but it's still too costly to borrow from a bank, for example, for those local populations. So, and then some of these banks do not give you the ability to pay, for example, in smaller installments over a longer period of time. So with these constraints, how can you structure a solution from a financial perspective, leveraging on social finance, but also on the other sources of development finance, like the funds from charities, from multilateral development institutions, etc. And you blend all of this together to offer a product that makes the cost of the final product very competitive to the final user, which is, in the among the poor populations. And some of the solutions have been working well so far. So what we try to do, this is what is done in the conventional finance, is to see how can we leverage on Islamic social finance to elaborate further or develop similar solutions. So I'm not sure if other wants to, maybe Mufti Barakatullah, you want to add something? Or?
I'm not a representative of Islamic banks.
Okay.
I'm supervisor on them.
Okay. Yeah.
Maybe I just want to add something. One of the leading innovation that is happening right now, because you were asking about the unbanked, right? So looking at the GCC country, there's this company called Money Now. So Money Now, they actually provide a bank account for the people that is not unbanked. So mostly people in UAE, right, the construction workers, they don't have any debit cards. So they look upon this potential. So this company called Money Now, they actually give a digital bank solution, and at the same time they provide them a debit card. And what's a plus point for this company is that usually if you see in Qatar, right, we mostly see most people when there is a certain day, they took out their money and immediately they go to money transfer places, right, with a high cost. Usually it's around 5% to 7%. So what this company actually do is that it integrate everything into one digital app. So they don't have to actually go to any physical bank to apply for it. Maybe they don't have the credit ability and stuff like that. So they just register online and have a debit card sent to them within a week or so. And they transfer the money to the people of their country with a cost of 0.5 to 1%. So this is happening, but the problem for these companies to incubate, right, is to get the license. So to get the license itself for the regulatory will take a long process. And why Islamic finance, or I believe finance in as a whole, don't actually adopt this kind of solution, because the due diligence of having this kind of solution is very high, like what is highlighted by Mr. Akbar. So usually this thing comes from a very, let's say, people that is just starting out from their careers, and they started to try to find angel investors in their process. But it's very hard to actually get the angel investors to invest in them if they don't have any licensing. So this is another problem, which if let's say we take an example of the artist crowd of Brother Umar Munshi, right? He started his company for almost from 2010. And he only got the license to operate in Indonesia in 2016. So the struggle that he has to get a license, for him to get a license, if I'm not mistaken, in Malaysia, right, is around $5 million capital. But he told me that within that 2 weeks, he tried to find any Islamic finance or Islamic finance people to actually bring in money for him, or not 5 million, 100 million ringgit, or 100 million ringgit. So it's very hard for him to actually bring that money into. And the only people that is willing to actually invest in him, or let's say Shariah compliant fintech, is actually the Chinese market. So we don't have the awareness within our community to actually to support our own Shariah compliant fintech industry.
I think we reached already exceeded the time by about 15 minutes, but because it's the last session, I think it's fine. So with this, I would like to wrap up this session. So I think we tried to, of course, you can have hours of discussion on fintech solutions. It's a very dynamic area. But what we try to do is mainly to highlight some of the experiences or some of the fintech developments globally. We also try to discuss the various challenges. Among them, of course, is the ecosystem that consists in the regulatory support, some of the Shariah considerations, some of the financial innovation, of course, to also benefit bottom of the pyramid populations, and not only to the traditional customers of Islamic banks or banks in general. And we had some discussions in the context of Qatar, which should be actually done in the context of every country, especially if you want to develop some retail solutions that need to cater for the local market needs. So with this, I would like to thank our panelists, and thank you very much for joining us in this session. And I wish you all a good evening. So hopefully you benefited from this session.